Welcome back to the channel. Tell me this isn't a move on the chessboard. Tell me this is not a setup, because it looks just like that. This article is titled "Genius Act Yield Ban May Push Trillions into Tokenized Assets." Just how they want it. They want to dominate. The companies and banks want to dominate when it comes to tokenized assets. These are things that they're going to control as close to 100% as you can get. This is what it says. The U.S. Genius Act may boost stablecoin adoption, but its ban on yield-bearing stablecoins could drive trillions into tokenized real-world assets. Yeah, because nobody wants to hold something that doesn't earn yield, especially not these companies. It just makes sense. But let's continue on here. It says the landmark U.S. Genius Act could serve as a major catalyst for stablecoin adoption, both domestically and abroad. But rather than simply boosting demand for dollar-backed digital currencies, it may unintentionally push capital into the tokenization market as investors seek yield on their holdings, right? And who's going to be big when it comes to RWA? Who's spoken about it multiple times, and you know to take them serious when they've spoken about it? Ripple, BlackRock, Algorand. These are companies that have experience in this. They've done the research. Some of them have rolled out RWA projects already. They're going to dominate when it comes to these things. They've wanted this the entire time. I told people in a variety of ways, stable coins are smokescreen. Trillions are going to come into tokenized assets, real world tokenized assets. And those things are going to move like hotcakes. And a lot of value is going to be made, not financial advice. Most of that value is going to be made by the companies. They're setting up right now. They know what's coming. They're getting in position. They're ensuring things like this happen. So when the RWA boom comes, it hits hard. And most people won't know about it. That's true. They don't. You go out there and talk to people in the world about RWA. They don't even know what it means. They're not ready for that. And given, although a lot of people did make a lot of value in the NFT boom a few years back, that was nothing compared to what is to come. Nothing. It says this. It continues. It says, but rather than, that was one of the key takeaways from a recent interview with Will Beeson, a former Standard Chartered executive and now founder and CEO of Uniform Labs, a developer of institutional liquidity solutions for tokenized financial markets. A central provision of the Genius Act is this blanket ban on yield-bearing stablecoins, which prevents holders from earning interest on their digital dollar balances. So what are they going to turn to? Well, first of all, what native tokens are going to be affected by a massive flow of RWA value? The XRPL is definitely going to be affected. All of those banks obviously want in on RWA tokenization. XRPL is one of a few bank coin companies that probably is going to absolutely dominate with thousands upon thousands of banks. In my humble opinion, not advice, you make up your own mind how you feel about that. But if that is to happen, then the native tokens, everything that hits the XRPL, as David Schwartz said, will affect the price of XRP, period. So if you have trillions in RWA coming, where does that price go? Does it stay where it is today? Absolutely not. Not in my opinion. No, it doesn't. And this is apart from, once again, interbank payments, payroll. RWA is somewhere in the future. I mean, they're trying to speed this up. I'm actually surprised that a lot of what I'm seeing is taking place right now. They're moving at a lightning pace, but even so, I still would say it's a few years down the road before we see that massive surge of capital coming into the bank coin companies from RWA. That's just how I see it. I can't tell you anything I don't see. Okay, so let me leave that there. Let's go here. We have more information here. I hope you're all having a fantastic day, by the way. If you haven't already, please take those powerful hands, make a fist, leave those two fingers up, and use one of those two fingers to press that like button. This article is titled, Ripple Executive on Why XRP Ledger is Uniquely Suited for Real-World Asset Tokenization. Right. Now, if you didn't understand before, now you understand why that first article is so potent. They're setting everything up. It's a setup. They're herding the cattle, so to speak, into one direction. They know who's going to win. The companies are keeping it to themselves. Most people don't know this. I have to re-emphasize that. You know why? Because I hear from so many people, especially when you have a channel, people are going to reach out to you everywhere, period. It doesn't matter whether you like it or not. You're going to be at the store. People are going to talk to you about crypto. They're going to find you. So I'm hearing this all the time because it seems like because people in their own circle, their social circle knows about this, they feel the whole world knows about it. No, they don't. I'm in contact with a variety of different people from all over the world, and a lot of people don't know this. And when it happens, they're going to be caught off guard. Keep in mind, they're going to be caught off guard in a world where you increasingly need to be enhancing how much value you have just sitting around for a rainy day. The entirement of the global economy is going to change because you have robotics and AI entering the market, of which if the people were prepared, then this wouldn't be too impactful. But the people are not prepared. So they don't know how to work with AI and robotics so that it works for them. They don't know that. So in that climate, yes, a lot of jobs probably are going to be lost because the companies themselves are not training the people how to repair the AI, how to use AI to enhance themselves, how to work side by side with robotics, upgrading people's positions where they can repair robotics, they can repair AI, sending them back to school, giving them incentives on how to, be programmers of these particular things or repair people of these particular, whatever it is. They're not ready. So they're going to need some sort of value. But so this type of thing is increasingly important because of that, in my humble opinion. Because when this goes off, this is going to be a once in a lifetime opportunity, period. The only thing that rivals the RWA boom from my calculations right now is just the interbank payments. That's it. You get these two massive explosions, interbank payments, boom, RWA, boom. And after that, who knows? That's where my vision ceases for now, until I see more technology come out, like quantum computing or something like of that nature. Then we may have more to speak about. But right now, they're going to, in my humble opinion, not financial advice. I'm just sharing my humble opinion. That's it. This is needed, but this is being hidden. It's being buried by everything else. Look at all the different news that's out there, and yes, that other types of news is eye-catching, drama news, etc. But this is what's important. But anyway, back to this article. Ripple executive on why XRP ledger is uniquely suited for real world asset tokenization. Let's scroll down and find out what they're talking about. They spoke about this years ago. They sent up the flare years ago. No pun intended. They put a flare into the sky 2 years ago. When they start speaking about, RWA, XRPL will dominate, with RWA, Ripple will dominate. This is coming from them, and I'm saying to myself, I take them serious. It begins here. Ripple Senior Vice President Marcus Infanger, the head of RippleX, argues the XRP ledger is built for the next phase of real world asset tokenization, and says today's SPV heavy market is only a bridge to native issuance. Interesting. What does that lead to? That phrase that he just said. But let's continue on here while you mull that over. In an August 12th blog post, Infanger draws a direct line from the 1970s shift in capital markets when Euroclear and the DTCC immobilized paper certificates in vaults while moving ownership records to be electronic to today's tokenization stack. He says special purpose vehicles, SPVs, play a comparable transitional role now. Legally familiar wrappers that hold the off ledger asset while issuing a tokenized representation on a network. The model is clunky and centralized, he acknowledges, but useful as infrastructure standards and policy mature. It is, in his words, scaffolding, quote unquote, not the end state. Infanger says the ultimate goal is fully digital assets, where the token itself is the legal record. Why Infanger believes XRPL stands out. Infanger's case for XRPL centers on protocol level capabilities intended for financial use from the outset. Once again, how many ways they got to tell people? I still have people telling me that XRP is not for the banks, even though they already said it. What does this mean right here? Intended for financial use from the outset. By whom? Not for retail. Who have they been going after? Everyone that's building on XRPL, who have they been targeting? The banks. Ripple targeting the banks. SBI targeting the banks. Uphold targeting institutions. Volante targeting the banks. Folks, they're going after the big money. It's not a bad thing. So first bullet point, it says on ledger exchange. XRPL includes a native order book exchange. Second bullet point, I'm chopping these, obviously. I have to keep it to some brevity. Second bullet point, near instant low cost settlement. Third bullet point, XLS 30 automated market maker. Next bullet point, XLS 65 lending vaults. A proposed standard for protocol level borrowing and lending. We read that document earlier this year where the banks were talking about going wild with lending. I'm paraphrasing, of course. Come on. They're going to go wild with lending, and that's going to have a heavy effect on XRP if everything plays out according to plan. Now, I don't mean to speak as if everything's a guarantee. I don't work for Ripple. I don't know these companies. I'm just a humble researcher. But I'm speaking from what I'm seeing. Everything's leaning in that direction. If everything begins to lean in another direction, then we'll have to speak in that tone. We'll have to speak in that way. Next bullet point, programmable compliance and custody hooks. And last bullet point, composability with exchange, liquidity, that's important, lending, and issuance primitives designed to interoperate. Tokens can, I'm trying to emphasize all the important little pieces. They are very important in this world. You can just look out there and see how all these pieces fit and repair something that's broken in the legacy system. Tokens can move through primary issuance, secondary trading, collateralization, and settlement without stitching together multiple external systems. And Fanger says that's the path to embedded liquidity rather than fragmented silos. Exactly. It's very funny. He just told everyone that the XRPL literally is the solution to the problem we read in an article the other day, where they were talking about fragmentation with some of these blockchains, not with the bank coin. You don't get that. You don't get that, right? He just told you why. So now let's move on to here. Another, we have a lot of information coming out lately. It's been very, very good. Now let's read this a little bit here. My apologies. My energy is a little different. Things have been so busy, just in every possible way. I know it's probably like that for a lot of you as well. So I'm just grinding my way through it. I'm moving forward no matter what. That's what I'm doing. Because I've definitely been worn out lately for sure. So I'm just explaining, right? So now, this article is titled XRP ETF launch is inevitable. Ripple CEO predicts trading could begin soon. So it begins here. Discussions about a potential XRP spot ETF continue to swell in the broader cryptocurrency community, even among well-known and top figures in the sector. It's coming. Everyone wants in on XRP, and all the big asset managers want in on XRP. They just can't say it yet until it's official. But I know a lot of you, listen, a lot of you are in the industries. You're in the financial industry, or you have friends, or you have advisors, and I know they're telling you the same thing I'm hearing behind the scenes. They know they're hearing it from certain sources that are very official. These big asset managers, they want it. Even the ones that you're hearing about that's coming out in the news, and they're like, we don't know. That's what we're hearing. And so we'll see, but it's inevitable. XRP is in the clear. Ripple's in the clear. There's nothing holding them back. This is going to be one of the biggest money makers. They're already dominating when it comes to Bitcoin and Ethereum. XRP is next in line. XR is like this: Bitcoin, Ethereum, XRP, Solana. That's their hierarchy right now. I'm talking about the companies. That's who they're looking at. And so XRP and Solana are next in line. And there will be others, but that's the next two, in my humble opinion, that are really going to have a lot of activity when it comes to this ETF activity in every possible way. So now, and that's just my experiences, my opinion. You don't have to take it, but this is discussion. I hear people out, they hear me out. Discussions about a potential XRP spot ETF continue to swell in the broader cryptocurrency community. Okay, we read that part. Let's scroll down here. Brad Garlinghouse, the chief executive officer of Ripple Labs, has made a bold prediction about the XRP spot exchange traded funds. The CEO, offering his insights on the fund, declared that it will be approved by the US SEC and will be trading soon. Why would it not? At this point, at this juncture right here, why would it not? Garlinghouse highlighted his bullish sentiment toward the fund in an interview featuring Yanni Asia, the CEO and founder of eToro, and Sam North, a market analyst at eToro. This bold statement from Garlinghouse is backed by the Bitcoin spot ETFs, noting that despite facing consistent challenges from the US SEC, it still gained approval from the commission. Given the monumental introduction of BTC spot ETFs, Brad Garlinghouse believes that an XRP ETF is inevitable, as he stated multiple times before. But now that everything is 100% in the clear, we do still have some smoothing out of just general regulations, of course, when it comes to crypto. But that's getting smoothed out. I don't see those being big bumps in the road for crypto for much longer, to be quite honest. But as far as XRP and Ripple, they're 100% in the clear. It's time to play. So yeah, I believe it's inevitable. In his view, the funds represent the transition from speculative retail trading to institutional adoption, what they've wanted all along, and what's going to make that XRP price skyrocket, in my humble opinion. Not financial advice. According to the CEO, the XRP ETF getting approval from the US SEC is a great sign from the altcoin and the broader cryptocurrency ecosystem. The Ripple CEO's comments are made as the race for supremacy in the upcoming wave of ETF offerings intensifies among digital assets. I don't agree with that way of thinking. Like, there's a race for supremacy and wave of ETF. No, listen. There's more than enough capital to go around. That's number one. Number two, when it comes to something like XRP or any of these bank coins, they can win in a variety of ways. And an ETF, if they don't have an ETF, there's nothing stopping them from absolutely going intergalactic. Nothing without an ETF. Interbank payments, trillions. Payroll globally, trillions. RWA, trillions. B2B payments of all kinds in an industry that is very much injured. Trillions. Helping and assisting small, medium-sized businesses in every way possible. Trillions. That's like 4 or 5 different catalysts. So an ETF is just sprinkles on top of an already delicious cake, in my humble opinion. But I'm just showing there's more than enough value to go around for quite a few of these top cryptos to thrive and explode. So I just disagree with that type of thinking. So now let's move on here to a little bit of Bitcoin news. And this article here, this article is titled "Bitcoin Growth Remains Exceptional as Data Shows BTC's Strongest Phase Just Starting." So it begins here. Bitcoin growth models project $200,000 by 2025 and up to $1.5 million by 2035, outpacing gold and NASDAQ in long-term returns. It continues. It says, the long-term growth of Bitcoin, which is showing red here at $117,858 at the time of this article, remains exceptional, according to a recent Bitcoin intelligence report, noting that even in the context of other major assets, its trajectory stands out. The report compared the Nasdaq's 10-year rolling compound annual growth rate, which typically sits in the middle single to low teens, with the latest decade delivering 16%. Gold has averaged 10.65% over the past decade, rising to 12.88% when adjusted for its 2% annual supply growth. Meanwhile, the US M2 money supply has expanded at roughly 6% annually over the same period. Against this backdrop, Bitcoin's model CAGR of 42.5% underscores its outsized performance. The company's power law model, which has tracked Bitcoin with unprecedented consistency, quote unquote, for 16 years, projects a gradual adoption-driven deceleration toward 30% by 2030. Still triple gold's supply adjusted growth rate. Quote, Bitcoin remains the cleanest barometer of global liquidity, unquote. Okay. The report states, citing its smaller market size and role as a, quote, liquidity sponge, unquote, and a structurally expansive monetary gain. The report shows that $114,000 to $117,000 accumulation zone proved resilient, triggering a spot-led rebound to $122,000. There's so many variables to take into account when it comes to global liquidity. Once again, I've said this before, much of it is an illusion. There's definitely a fiat currency problem. And then the motion of value from one asset to another, something that's an actual protective asset like gold, and it flows out of gold into something that's semi-protective like Bitcoin, albeit Bitcoin is increasingly becoming more as a protective asset over the next few years, in my humble opinion, as that price goes from low to high, but that depends on where people get in, of course. Then moving out of something like that into other risk assets, then out of those into non-banking financial institution offerings that people over time, and we'll see what happens, because every 3-4 years things are changing rapidly. Those may become more desirable in the future. So, I mean, the value is just flowing around is what I'm saying. So that's a variable to take into account. And there's no telling, because of the fragility of the system, when liquidity is going to be rapidly removed. And and the problem with that is typically that liquidity is removed by major actors first, and then regular individuals secondly. So by the time it happens, unless you're calculating those variables, it can seem to come out of nowhere, number one, and two, it could hit the world pretty hard, and that bubble can pop very quickly, is what I'm saying. So this can be a very difficult thing to say that, oh, well, Bitcoin is a barometer for global liquidity. I suppose in the moment, but I think that needs to be known. Like, that needs to be said, like, momentarily it is. So I'm just going to leave that there. Bitcoin $200,000 target by Q4 remains on track. This is what they're saying. I hope it's true. I want to see that. You want to see that? While the immediate resistance lies just above $130,000, the year-end target for Bitcoin remains close to $200,000. Its price projection combined, by that time I would have sold considerable amount of Bitcoin. Although, like I said, I would keep a little bit. I would keep a little bit just to see how high Bitcoin goes. But just my humble opinion. All right, not financial advice. Its price projection combines the power law approach with quantile analysis to track Bitcoin's historical growth. According to the model, the base trend for Bitcoin by the end of 2025 sits around $120,000. Factoring in the cyclical bull phase, the price could realistically climb to between $150,000 and $200,000. Looking further out, by 2035, the model anticipates Bitcoin could reach $1.2 million to $1.5 million. Ooh-wee. We've heard others speak this way. I believe it's Samson Mao speaks this way, and one or two others, but I can't recall their names. Do you believe Bitcoin could reach 1.2 million? What do you think? You think that? 1.2 million to 1.5 million. I'm just bear with me. I'm just thinking. I'm looking at all the catalysts. The highest right now, right? I would be willing to say Bitcoin could reach with if it's maxing out the catalyst that we're seeing currently, and not just what is to come. Like, there's a lot of businesses that haven't gotten in yet. No, just maxing out what is currently. I would say between $400,000 to $450,000 Bitcoin you might be looking at. That's if everything is maxed out. All right. There's no telling what these companies are going to do. And I wouldn't be one to trust them, to be quite honest. But that's about as high as I would say. But that's as far as I'm willing to go right now, until other companies show me you're getting in. They're saying they want to get in. Show me you want to get in. And then we'll go from there. Now we have something more solid to calculate. And of course, everyone's calculations are going to be different. I can respect that. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.